Today, we're unpacking a topic that could play a pivotal role in your financial security. That is critical illness cover, often shortened to KIC. If you've come across this type of insurance before, but aren't entirely sure how it works, or if you're on the fence about whether it's right for you, then you're in the perfect place. KIC can serve as a financial lifeline during some of life's most difficult moments, helping you focus on recovery without the added strain of money worries. But deciding if it's worth including in your financial plan isn't always straightforward. We'll take you through everything you need to know about critical illness cover, breaking down what it is and how it works so you can understand its full potential. From the possible costs to the specific benefits, we'll outline the pros and cons to help you make an informed decision. We'll discuss who this type of insurance might suit best, such as those with dependents or anyone wanting extra protection should serious illness arise. By looking at these details closely, we hope to give you a full picture on when KIC can be a practical solution and when it might be less necessary. As a bonus, we'll also share a real-life case study to illustrate how critical illness cover has provided valuable support in a time of need. By the end of this video, you'll be equipped with the insights needed to decide whether KIC aligns with your own financial goals or if it's something you can set aside. Critical illness cover is an insurance policy designed to provide financial support if you are diagnosed with a severe illness. It pays out a tax-free lump sum upon diagnosis of one of the covered conditions. These typically include major illnesses like cancer, heart attacks, strokes, and organ failure. Some policies also cover other conditions, such as multiple sclerosis or even loss of limbs, but the specifics depend on the insurer and the policy. So why would anyone need this? Well, being diagnosed with a critical illness can drastically affect your ability to work. And in the UK, statutory sick pay may not be sufficient to cover all your expenses. Moreover, many critical illnesses require extensive medical treatment, rehabilitation, and time off work, potentially creating financial strain for both you and your family. Most people think it's only something that older individuals need to consider, but critical illnesses can strike at any time. For younger people who still have financial commitments, such as a mortgage, KIC could act as a safety net, ensuring that medical bills or living expenses are covered during recovery. So how does critical illness cover actually work? Let's break it down into simple terms. When you're diagnosed with a critical illness listed in your policy, you receive a one-off tax-free payment. The amount you receive depends on the coverage level you've opted for. This money can be used for anything you choose: medical treatments, mortgage payments, or even just keeping up with everyday living costs. Policies differ based on the insurer. One important thing to note is that critical illness cover doesn't cover every illness, only those specifically outlined in your policy. It's crucial to read through the list of covered illnesses and exclusions to make sure you understand what's included. For example, not all types of cancer might be covered, or conditions like early-stage illnesses may not qualify for a payout. KIC can either be purchased as a standalone policy or combined with life insurance. A combined policy could pay out on diagnosis of a critical illness or death, whichever comes first. The benefit of this is often a lower premium, but the downside is that there's only one payout. If you claim for a critical illness, there will be no payout for life insurance. One key clause in most critical illness cover policies is the survival period. Most insurers require that you survive for a set period, usually 14 to 30 days, after diagnosis, before the policy will pay out. Now that you know what KIC is and how it works, you might be wondering, is it worth the cost? Let's weigh the pros and cons. The cost of critical illness cover depends on a variety of factors, such as age. The older you are, the more expensive it is. Health, Pre-existing conditions may result in higher premiums or exclusions from coverage. Coverage amount. The more you want to receive as a lump sum, the higher the premium. Lifestyle choices. Smoking or high-risk activities will increase premiums. In the UK, the average premium for a critical illness policy varies, but for a 35-year-old non-smoker looking for £100,000 worth of coverage, premiums might range from £20 to £50 per month. It's important to get quotes from different insurers to find the best deal. So, what are the benefits of KICK? The biggest advantage is the financial peace of mind it provides. You won't have to worry about covering your bills, mortgage, or medical treatments while you're recovering. The lump sum payment can be used for any purpose. You could pay off a portion of your mortgage, pay for private treatment, or simply maintain your lifestyle while you're unable to work. Having financial backing means you can focus entirely on your health and recovery, rather than stressing about money. However, it's important to consider whether the cost is justified for your personal situation. If you already have substantial savings or other insurance policies that would cover your expenses during illness, KICK might not be necessary. Not everyone needs critical illness cover, but for certain groups, it could be a valuable part of their overall financial plan. Let's look at who might benefit the most from KICK. If you have a mortgage, especially a large one, critical illness cover can ensure that payments continue if you're unable to work. Missing mortgage payments could lead to repossession, so having a payout could keep your home secure while you focus on getting better. If you're a parent, the financial strain of a critical illness could have ripple effects on your family. With KICK, you can protect your family's lifestyle by making sure that everyday living expenses, school fees, or childcare costs are covered during your recovery. For the self-employed, falling seriously ill can mean losing income entirely. Statutory sick pay isn't available, and your business could suffer without your input. KICK provides a financial cushion, giving you time to focus on your health without the added pressure of lost income. If you're employed, it's worth checking what benefits your employer provides. Many companies in the UK offer critical illness cover or income protection as part of their employee benefits package. If you don't have access to these benefits, buying critical illness cover privately could be a smart move. If certain serious illnesses run in your family, such as heart disease or cancer, critical illness cover could provide an added layer of security, knowing that you're more at risk. Let's look at a real-world scenario to see how critical illness cover can make a significant difference in someone's financial stability during a health crisis. Emma, a 42-year-old single mother with 2 children, took out critical illness cover 5 years ago. At the time, she had just bought a house and wanted to ensure her mortgage would be covered if she ever became seriously ill. Emma was the sole earner in her household, and she saw KICK as a way to protect her children if anything happened to her. 2 years ago, Emma was diagnosed with breast cancer. Treatment required her to take an extended leave from work, and while she was entitled to statutory sick pay, it wasn't enough to cover her mortgage, bills, and other living expenses. Luckily, her critical illness cover paid out a lump sum of £150,000. This not only allowed her to cover her mortgage payments for the next year, but it also gave her the peace of mind to focus on her recovery. Emma used part of the lump sum to pay off a significant portion of her mortgage, which reduced her monthly payments. The rest she used to cover household expenses and additional private health care that improved her chances of a full recovery. For Emma, critical illness cover was worth every penny. Without it, she would have faced severe financial strain while battling a life-threatening illness. So, is critical illness cover worth adding to your financial plan? The answer, as always, depends on your personal circumstances. If you have financial dependence, a mortgage, or are self-employed, KICK can provide a valuable safety net during challenging times. However, if you already have a robust savings plan or other forms of insurance, you may decide it's an unnecessary expense. Before making a decision, it's crucial to assess your financial situation, consider your health risks, and seek professional financial advice. We hope this video has provided you with valuable insights. If you found this information helpful, give this video a thumbs up, subscribe to our channel, and hit the notification bell so you don't miss any of our future content. If you have any questions or topics you'd like us to cover, drop a comment below or get in touch with us using the link in the description. Also, make sure to check out the Xenia Learning page, which we've also linked in the description box. There, you'll find further reading materials, as well as a full transcript of today's video, so you can revisit any of the key points we covered. Lastly, always seek professional financial advice that's tailored to your personal situation before making any decisions about protection products. Every financial journey is different, and a professional can help guide you in the right direction. Until next time, plan smart and prosper.